One thing to be mindful of in 2025 is that the ISM manufacturing hasn't stayed above 50 for 29 months. That's the longest stretch in history. So we know businesses have been ultra cautious. Despite what people say is froth, I mean, maybe the Robinhood community is quite enthusiastic, but in a general sense, because Fundstrat has 10,000 RIA clients and over 400 hedge funds, our community of clients is not that enthusiastic. I think it really does sync up with the $7 trillion of cash that you see. People are cautious, and when people are cautious at the top, as you know, that's not bell ringing. That's generally more mid-cycle. Keep in mind, MicroStrategy is just a play on Bitcoin. As you can see, as long as global liquidity is improving, it's bullish for Bitcoin.
Tom Lee opened by addressing a familiar question: are markets getting frothy? It's a valid concern, especially for those who lived through the dot-com bubble of '99, the COVID-fueled peaks of 2021, and the brutal pullback of 2022. But Lee's take is nuanced. Despite rising markets, his view is that sentiment is far from euphoric. In fact, it's still largely cautious.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
But you've been right. Like when you've been bullish and held strong and held fast, when others were cutting their S&P forecasts, people gave you grief, you've been right. Do you worry? Is there any part of Tom Lee that worries at all, not the drummer, that worries at all that things are getting a little frothy?
Brian, we've seen markets get frothy and correct. I've been covering markets for 35 years. So, I went through 99. We went through 2019 and 2022 and the 2021 top that was painful into 2022. And I'd say that signs of a top are really reckless use of borrowing at a time when cycle indicators are at a top. One thing to be mindful of in 2025 is that the ISM manufacturing hasn't stayed above 50 for 29 months. That's the longest stretch in history. So we know businesses have been ultra cautious. Despite what people say is froth, I mean, maybe the Robinhood community is quite enthusiastic, but in a general sense, because Fundstrat has 10,000 RIA clients and over 400 hedge funds, our community of clients is not that enthusiastic. I think it really does sync up with the $7 trillion of cash that you see. People are cautious, and when people are cautious at the top, as you know, that's not bell ringing. That's generally more mid-cycle.
Yeah. I'm going to give another stat here from, I don't want to steal people's stats without giving them credit. My friend and colleague Max Myers says that Meta and Microsoft now have the combined market cap of the entire Tokyo Stock Exchange. Every company in Japan, the world's fourth or fifth biggest economy, every company combined is now the same size as just two American companies. Does that kind of stuff worry you, Tom? Or are we that much better? Is our system better? Are companies better? We deserve that.
Well, I like Max's stats, but one thing Max should keep in mind is that if you look at earnings growth since 2019 to now, the U.S. has left every other country in the dust. India is the second closest, but almost 20 percentage points behind. Of the top 25 most profitable companies in the world today, 21 are U.S. companies. So there's a reason Microsoft and Meta dwarf other countries. They're leaders in innovation. And if we look at what really is the juggernaut of the U.S. economy, it's technology and spearheaded by AI and now digital assets. But it's also financial innovation, and that's Jamie at the helm there. The leadership of these two sort of things driving the U.S. economy are kind of unassailable. So in my opinion, I think it's justified that these are the largest companies in the world. I thought I'd give you a macro update talking about 2Q5 earnings season. This is the heaviest week of earnings, and as you can see here in red are the granny shots. Cadence reported after the close Monday, and before the open is PayPal. In light blue are the SMID granny shots. The heaviest day for earnings for both granny shots and SMID granny shots is Wednesday and then Thursday. And so far, 36% of the S&P 500 is reported, and they're beating by 6.2 percentage points. That's a nice surprise level. And if you factor in that earnings were expected to grow roughly 6% at the start of the earnings season and add in the 6% beats, it's adding up to about 12% earnings growth for Q2. That's pretty impressive. And again, as I'm emphasizing, we are in the heaviest week of S&P earnings. Next week is also big, but then after that, earnings season is over. Speaking of earnings, the S&P 500 has produced strong earnings growth since 2019. As you can see, the US has produced cumulative earnings growth that is outperforming every other country or region. India is the next closest. And even in the last 3 years, this is true. You can see cumulative earnings performance, the S&P outperformed, except for India in this case, a little closer. But that could explain why the S&P has been a major outperformer versus global stocks. Now, the trend looks like it broke during the tariff wars, but as you can see, that has since recovered, and I think it's resuming the outperformance. Now, let's look at the granny shot stocks specifically. If we look at the top 5 performers, it's GE Vernova, AMD, Caterpillar, Cadence, and Arista Networks. Now, GE Vernova reported last week, but still strong follow-through. Great results. Cadence reported on Monday, good results, up 6%. And then the rest of these top 5 performers are reporting on August 5th. Now, on the bottom 5, leading it on the downside is MicroStrategy, then Netflix, Intuitive Surgical, Axon, and CrowdStrike. Now, Intuitive Surgical reported a slowdown. You know what? I guess we're having some issues here with Intuitive Surgical and FICO. MicroStrategy is going to report on the 31st. Okay, but keep in mind, MicroStrategy is just a play on Bitcoin. And as you can see, as long as global liquidity is improving, it's bullish for Bitcoin.
The conversation then turned toward crypto, where optimism is quietly building. Bitcoin has seen renewed momentum, even amid supply pressures. For instance, Galaxy Digital sold 80,000 Bitcoin last week, coins that had been dormant for over a decade, likely bought at under $1,000. Despite this massive sell-off, prices remained resilient. On the Ethereum front, the technical picture is even more bullish.
As of July 28th, the price of granny shots was $23.67, net asset value of $23.65, and total assets of $2.024 billion. Yes, you heard it correctly. We crossed over $2 billion of assets for granny shots. So thank you for your support. We are really thrilled that you are supporting us. I want to cover the performance of granny shots over the past week. In the past week, granny shots gained 2.19% compared to a 1.34% gain for the S&P 500, or relative outperformance of 85 basis points. Year-to-date, granny shots is up 18.5%. That compares to the S&P 500 up 9.44% on a total return basis, or relative outperformance of 906 basis points. I thought it'd be helpful to give you a sense for granny shots' relative performance against major indices. Year to date, the NASDAQ 100 is up 11.61%, or beating the S&P by 2.17%, or 217 basis points. The MSCI Momentum is up 17.06% and beating the S&P by 762 basis points. And as you can see here, granny shots up 18.6% and beating the S&P by 915 basis points.
Don't forget, there's a whole lot of old sellers that are holding on to Bitcoin they've had, there's a whole cohort of people holding on to Bitcoin that they bought at under $1,000. And that supply will definitely hit the market. I mean, we saw just last week that there was a wallet or a set of wallets sold by Galaxy Digital. 80,000 Bitcoin was sold into the market in in a couple of days. Now, those Bitcoin, if I'm not mistaken, had been dormant for either 11 or 14 years. They were bought under $1,000. And whoever's selling them is selling them now at $115,000, $120,000.
Okay, you mentioned ETH. Let's talk about ETH now. Flip over to this chart here. ETH is now trading at above $3,700. It's crossed the so-called golden cross. The moving averages, short-term and long-term moving averages merging, and it's now trading above both. I believe this is 9 and 21-week moving averages on this chart. Anyway, I'll let you evaluate ETH. I was just wondering whether or not, this is May 9th, May 8th. The Lubin announcement was made May 27th. I'm not sure if that had any impact on the ETH price.
I think that you can see that they front ran the announcement, right? I think you can kind of see that people front ran the announcement. I think it's pretty clear that the announcement pretty much got front run by the ETH community. No surprise. I mean, yeah. I think the more interesting chart is if you go look at the ETH BTC chart, that's also had the golden cross. So if you look at ETH BTC also had a golden cross. So all in all, if you're looking at charts, it's super, super, super bullish. Like it's super, super, super bullish.
Yeah.
I think you just have to do ETH BTC. Just do ETH BTC and it'll give it to you.
Yeah, there we go. Okay. Okay, so is this is a sell indicator for Ethereum, or is this?
No, I think this is great. I think this is I think if you look at the ETH BTC chart, I mean, it's just showing you that there's so much strength for Bitcoin, for ETH against Bitcoin. This is probably this is the last part of the bull market. This is where the altcoins and ETH and related coins actually land up outperforming.
Mm-hmm. Okay.
Bullish structure.
Well, you actually have a. Excuse me, I'm a little bit sick. You actually have a trading bot now out for both ETH and Bitcoin. Just high level, walk us through how it works. And
I'll tell you what I've done recently is I know that I wrecked myself. Well, I wrecked myself. I landed up making money, but I didn't land up making as much money as I should have in the last part of the crypto bull cycle in the last bull markets, right? And the reason why I did that is because I let my emotions get the better of me. And I think there are a lot of people in investing that get caught up in emotions. And now look, I would say by now I'm quite an astute investor. I've seen everything. And even now I get caught up in emotions, even though it's a lot less. And so what I decided to do in this cycle was actually to eliminate human emotion for some of my capital for the last part of the cycle. And by eliminating human emotion, what I did was I tasked a set of bots and AI agents to actually trade for me. And the reason is because I just think that rules-based trading is much, computer-based, algorithmic-based trading is obviously much better than human-based trading. And I must say, it's been about a month that I've been running a lot of these bots, and the results have been absolutely mind-blowing, to be honest, and absolutely mind-blowing.
One of the more personal moments in the interview came when the conversation turned to trading psychology. Lee admitted that in the last crypto bull cycle, he let emotion cloud his judgment and missed opportunities. So this time, he's doing things differently. The bots have been live for a month, and early results? Absolutely mind-blowing, he says. While this isn't investment advice, it does reinforce a key lesson. Whether it's AI in markets or just building a disciplined process, emotion-free execution often wins over gut instincts.